Staying on top of your income tax obligations is crucial, regardless of whether you are an individual or a business. Navigating the world of taxes may be overwhelming, especially when it comes to deadlines and extension requests. I will discuss the critical tax deadlines you need to be aware of, how to request extensions, and the consequences of missing deadlines. With the information at hand, you can confidently take on tax season. Different deadlines apply to different types of taxpayers, depending on their employment status, residency, or business structure. Below are the primary income tax deadlines you should be aware of. Individual taxpayers. The deadline for individuals to file their personal income tax return is April 30th of the year following the tax year. For example, for the 2023 tax year, the deadline is April 30th, 2023. Self-employed individuals. Self-employed taxpayers and their spouses or common law partners have until June 15th to file their income tax return. However, if the individual has a tax balance owing, they must pay it by April 30th to avoid interest charges. Corporations. The deadline for corporations to file their income tax return is within 6 months after the end of their tax year. The tax year for a corporation usually corresponds to its fiscal year. For example, if a corporation's fiscal year ends on December 31st, it must file its income tax return by June 30th of the following year. Trusts. Trusts must file their income tax return within 90 days following the end of their tax year. Most trusts have a tax year that ends on December 31st. Therefore, they should file their return by March 31st of the following year. Although there's no specific process to request an extension for filing your income tax return in Canada, you may be eligible for leniency if you meet certain criteria. The Canada Revenue Agency, CRA, has a taxpayer relief program, which offers taxpayers relief from penalties and interest under specific circumstances. Taxpayers can apply for relief if they have experienced extraordinary situations such as personal health issues, a family crisis, natural disaster, or severe financial hardship that affected their ability to meet their tax obligations on time. To request relief, you need to complete the Form RC 4288, Request for Taxpayer Relief, and provide a detailed explanation and relevant documentation to support your claim. The CRA will then review your application and inform you of their decision. Note that being granted taxpayer relief doesn't mean that your tax balance will be reduced, only the penalties and interest may be cancelled or waived. Missing a tax filing deadline can lead to several financial consequences, including penalties, interest charges, and enforced collection actions. Penalties. If you file your income tax return late and have a balance owing, the CRA will impose a late filing penalty. The penalty is 5% of your balance owing, plus an additional 1% for each full month your return is late, up to a maximum of 12 months. If you repeatedly fail to file your return, the penalty rate may increase. Interest. In addition to penalties, the CRA will also impose compound daily interest on your balance owing, starting from the day your return was due. The interest rate is updated quarterly and can be found on the CRA website. Collection actions. If you remain unresponsive to the CRA's attempts to contact you and settle your tax debt, they may take legal action to collect the outstanding balance. This may include seizing your property, garnishing your wages, or even taking you to court. The best way to avoid these consequences is to ensure that you file your income tax return on time and pay your balance owing by the due date. If you anticipate difficulties filing or paying your taxes, consider seeking assistance from a tax professional or contacting the CRA for guidance.